Vincenzo's Go Crypto Investing, and we got some breaking news here in the coin world. As you like, subscribe, and share for a one-of-a-kind, company-made, computer software trading probability-based trading alert, tactical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere, as old Vincenzo has brought back truth and, most importantly, integrity back into the trading sphere as I shoot you straight from the hip like shoot him McGavin, right? And I don't give you any of the moon boy propaganda, it's nonsense. And after a big tank in the cryptos that old Vincenzo's been anticipating, you can see Bitcoin sheds after crypto lender Celsius network freezes withdrawals. It literally shut its website down along with Binance earlier. London, June 13th, Bitcoin tumbles on Monday after major U.S. cryptocurrency lending company Celsius network frozen withdrawals and transfers, citing extreme conditions and the latest signal of the financial market downturn hitting the crypto sphere. And I've been warning you with this. All you people that keep all your money because you don't trust the banking system, and this is very important, and you need to get your notepads out and take notes. This as I'm recording it and you save it, is if you don't trust the banking system and you keep all your money in liquid cash on these random exchanges, you're at more of the mercy than at a bank. At least if you're worried about your bank going insolvent, you're going to have time to see that happen. When you leave all your money on these random exchanges, even if they're a big-time exchange, Binance, Bybit, Coinbase, right, or a large exchange, at any moment without warning, they can pack it up and shut down and all your money's gone, right? Your money on exchanges is not safer or should be an alternative to a bank, right? That's just not how you want to do things. And this is another example of that, right? When things get tough, you can't get your money out of here if the exchange you're on wants to shut down its service. Temporarily or permanently, you have no idea how long it's going to last, if and when it's ever going to come back online, right? And you're at the mercy of these exchanges without a lot of legal. You don't have a lot of options if these exchanges just walk away with your fucking money, or if they do some stuff like this where they don't give you access to your money. These exchanges are way more risky than banks. Banks I don't agree with or like, right? I know the risk in banking, but I would prefer to have my money in a bank than on a crypto exchange, right? These crypto exchanges get hacked all the time. Money gets stolen. You have companies that literally pack up overnight and steal all the money on their exchange and leave. And then you're out of your money. You can never get it back, right? And this is just another warning, along with the Luna collapse that happened. Two more U.S. stable coins, or USDTs, USD and US something else, have now lost their peg from the dollar, and they're big stable coins, or what people thought were stable coins, even though it should be becoming apparent what's going on. As we have a big crypto winner that old Vincenzo was first on the horn last April telling you with the Elon Musk that it was the top, right? The Celsius, if that's how you pronounce this, move triggered a slide across cryptocurrencies where their value dropped below 1 trillion on Monday for the first time since January 2021, and 12% down on the day. And Vincenzo gave you that warning about how 21,000 was the next underneath support if you broke that white support zone. After Celsius' announcement, Bitcoin touched an 18-month low of 23,300. Number two token dropped as much as 18%. Ethereum down to $1,176. And we've had a long-standing target since Ethereum was at 4,000 that it would drop below $500. And now it appears to be a done deal, right? Not so many naysayers now. Market extends its sell-off Monday after U.S. inflation data. Once again, I told you, the cryptos are risk-off assets, right? When everyone's feeling good, the money's flowing, inflation's low, and the financials are doing great, or risk-on. When risk is on, and everyone's taking on tech sectors. Again, what I mean, the money's flowing good, the markets are booming, the financials are good, risk is on, Bitcoin and cryptos can explode. But when you're in a risk-off like you're on now, and an inflationary depression that old Vincenzo's been warning, cryptos get hit the hardest, followed by the tech sector and money-losing companies, right? And that's just the way it is, and you're seeing it for what it's worth. But a lot of these charlatans on YouTube,
I don't want to call them out by names because I feel bad for them, that they still are trying to hang on to these lengthening 4-year cycles or news cycle theory, whatever the bullshit they're spewing. The market's down 60%. You're having coins go bankrupt like Luna Classic now. Luna 2.0 is verging on bankruptcy. You're having exchange having liquidity crises, shutting down exchanges and packing up, and they're still not seeing the bear market that we're in. They still think it's a bull market. Like, at what price does Bitcoin have to go to before they say it's a bear market? These guys are just clueless, right? It's almost like my email knew I was talking about Coinbase. They're clueless, and this is another example of very bad news coming for crypto, right? You can't keep having this kind of thing where these exchanges are going belly up. Binance, I'll get into my next article, Binance locked up their exchange, right? One of the biggest, the two major U.S. exchanges locked up. And people that are keeping their money on these exchanges instead of a bank, you're making a dire mistake, and I think it's going to have catastrophic consequences. As liquidity crunches and liquidations of services, exchanges, and coins continue to happen as this bear market strengthens in the financials and in the cryptos and the stocks, it's only going to get much, much worse. Now, what I would be looking at in the short term with Bitcoin is at 21,114 to 20,291. And you say, Vincenzo, why are these the two big levels? Well, we've been watching these levels for quite some time as we have a $13,000 price target from our mountain double top there, right? We'll pull up our industry exclusive purchasing tool, and you can see double top 1, double top 2. And if you do a targeted move from the top of the double top to the neckline down here and take that to a point of a breakout, it gets you to about $13,000. But then we have this midway consolidation, and I told you this was a bear flag, a bearish continuation pattern, right? And how you take the targeted move out of that is you go from the top of the pole to the bottom of the flag like this. And then you pull it to the point of a breakout, like so, right? And look where that gets you, right to that $20,000 to $21,000. That's why when we were in this white support zone, I kept telling you that this is likely another bearish continuation pattern, because the next leg to the downside to fulfill that targeted move should get you right to $20,500 to $21,000 out of that bull flag. And then you could have a nice bounce, right? A relief rally, an oversold rally, until you make another bearish continuation pattern to get you down to that late 2022 target of $13,336, right? And I've had that up here since Bitcoin was at 63,000 and rising. Into the face of the heart of the hype train, again, the second hype train of last year, Vincenzo never wavered from his technical analysis, never wavered from what he thinks is the overall structure and the direction of the macro market as we were heading into late 2021, and I made my 2022 calls. And now you can see those 2022 calls are being hit. You got exchanges being liquidated and coins going belly up and people losing a lot of money. And I've exposed the stable coin myth, that there is no such thing as a stable coin in crypto. And people still don't understand it. And these markets are getting hammered, right? They're getting hammered, and they're still very expensive. And people say, oh, Vincenzo, how are they still very expensive? Because a lot of these coins that have a $1 and north, or $10 or $100 or 1 cent, they got a lot of points and zeros to add on to a lot of these coins, right? Dogecoin, that Dogecoin millionaire, right? He didn't understand what was going on, and the only reason he made $150,000 into $3 million on paper is because he was so delusional and so out of touch with what's going on. It's just dumb luck and pure stupidity got him there. But then you say, Vincenzo, how could it be pure stupidity that got him to the $3 million? Well, because he's lost it all now. Dogecoin's essentially 50%. He's on a 50% gang now. He went from $3.5 million. He's sitting barely above break even now because he's so delusional and doesn't understand how he even made that money on luck and delusion. And then you just lose it all because you never sell, right? Because they're so delirious and delusional, right? Using credit cards to collect Doge. What good is that if Doge is worth a fraction of a penny? Who gives a fuck? I'd rather have a credit card that pays me cash, right? Cash is still king when it comes to buying assets and preserving some sort of purchasing power in the short term, right? The long term, it's horrible. But the short term is great because look at your cash raising in value right now in comparison to buying stocks or Bitcoin. It's went up immensely. Bitcoin is getting hammered in comparison to the dollar right now, but they're not going to tell you that. It's the worst performing asset this year by far. I mean, it's just amazing. So what I would watch in the short term is $20,000 Bitcoin to 21,000, about where we touched, to where you could get a nice bounce and make a run back up into this volume indicator, right? We'll pull that out into the current time frame. And then you can maybe make a run back up at the top part of the white support box to get rejected and then continue down, right? So the 21,114 is a targeted move, and we're almost there. And there could be a bounce anywhere around here, right? And if you look at the dollar got out of the chute hot again today, and it's continuing to stay hot. Gold got hammered, great buying opportunity. I'm going to go into the open market and buy a little bit more of my favorite companies that I own, because I have goals about the shares I want, because they're not going bankrupt. They're just getting beat down in a financial crisis right now, but those will eventually, in the near term, turn around quick and fast, and you have to be into that before they start moving, because when gold starts to move, gold pops, right? And gold's down this year, yes, but gold's down about 7% on the year. Bitcoin's down over 60, right? And it's got a lot farther way to go. And Bitcoin can go to zero. Gold cannot go to zero, right? I think the bottom for gold on a big flush is about 1,550 to 1,600, and that would be the ultimate phenomenal buying opportunity where you should be backing the trucks up in these mining stocks, right? And then if you look at the stock market again, the stock market got hammered, but I'm still noticing this. These March 2023 futures up 4.5%. And then September futures are hedging a little better. I think when the Fed talks Wednesday, I think you could have a pump like the last couple of times. So I'm going to be watching out for that to see if that does happen. And then we're going to end out on some more breaking news. This was more of a breaking news update on things that I believe you guys need to see. We went over that. Now let's look at Binance. Another major, let's go to the hype train, HART, CNBC, and this is another coin. Of course they would put it on their fucking app shit, dude. God. See, those sites are so bad, you can't even use them, dude. Let's go to Financial Times. Maybe they're better. They got all this nonsense, too. Fuck. So let me read your bullshit. So you can see Binance on Monday halted withdrawals of Bitcoin, a major exchange in the U.S., right? Watch the Money Show. They got very valuable information up there. The Money Show and Kitco News, very informative and very educational. Bitcoin for several hours after the crypto lender Celis also blocked customers from pulling funds from their exchanges and platforms. And you should be taking warning on this. The reason they stopped you from pulling money off their website and exchanges is because they would have had a liquidity problem, and it could have forced them to go belly up. So they forced you to keep your money on that exchange and held your money hostage. And you were at the mercy of these exchanges to pull your money off and hope they don't go bankrupt because they don't have any money. The liquidity they're saying they have, they don't, right? And this is a major, major, major warning being fired off, and no one's really taking this to heart. They think it's a blip on the radar and it's nothing to notice. But this is week after week now of financial problems in the crypto market and exchanges and coins and fraud, deception, and dishonesty. And you people are getting run through the ringer, right? Bitcoin, Ether, and other major tokens have wobbled. They've crashed in recent weeks while inflation has surged and risk off has taken place, and major central banks have signaled they will cut back stimulus hard, which means these coins got a long way to flush, and anybody that had paper money and laser beam eyes and diamond hands, you guys were had and fleece heisted and shysted by the criminal gangsters that have infiltrated the Federal Reserve, the United States government, and world monetary and fiscal policies that drive this nation. And you're being fleece heisted and shysted by these market manipulators. And I don't know what it's going to take for you guys to wake up, but this is a major warning shot when in exchanges at a time when you would want to get your money out, they wouldn't let you touch it, right? Bitcoin is the world's most actively traded cryptocurrency, and it's dropped 20% since Friday. And Vincenzo gave you that warning of a 20% fall, right, to get out of the way of that. And not a lot of people did. A lot of people got wiped out, right? From its peak of $3.2 trillion in November is now below $1 trillion, right? And that's not too hard to see. It wasn't too hard to forecast either, or to see that it could happen and would happen. if you got your head out of your ass and you're using rational thinking and not all this hype train stuff, right? Celis is one of the biggest players in the market, and digital yield produces, providing users with the ability to lend out their tokens.
Like I was saying, I got cut off work. I had to show a guy, an iron worker, to pick up. But like I was saying, you got to be very careful with having your money on exchanges versus banks, right? That's not safe. It is absolutely not safe. As you can see, I keep getting homes for sale now being sent to me, as I am an avid investor in that. And they weren't sending anything for quite some time the last month or a year, and now they're starting to send them, so the housing must be starting to stack up. But it's not safe to keep your money strictly on exchanges. It's very risky. It's 100-fold more risky than having your money in a bank. I don't use the big banks. I don't like J.P. Morgan. I don't like Wells Fargo or Bank of America. I like local credit unions. They're more fiscally conservative on what they invest their depositors' money in. They take much, much less risk, and it's much, much safer than a mainstream big institutional bank. I like local credit unions. They're more in the community, and you're part owner of a credit union when you deposit money, unlike a big major financial bank. But in recap, very dangerous to keep your money on these exchanges. Very, very dangerous in times of crises, right? Thank you. It's very, very dangerous, right? It's a very dangerous thing and a very dangerous game to play. As there's been lots of major big exchanges where they go belly up essentially overnight, and or the people that own these exchanges sometimes literally just close up shop and walk away with all your fucking money, and there's nothing you can do about it. It's not like a bank. In the United States, if your bank decides to close up shop, you have more ability to get some, if not all, of your money back, right? On these exchanges, if it's gone, it's gone. You have no legality. There's nothing. You need to be very careful, right? Sentiment towards the high-risk projects have cooled sharply. Terra and Luna token collapsed. Stable coins are being, I've exposed the stable coin myth, and you guys need to pay attention. The value of these assets have shriveled to less than $12 billion as of May 17th from $24 billion. So they've been cut in half. And when these exchanges get cut in half and the liquidity on these exchanges get cut in half, there's a problem. They don't have the money to give back to customers if they all start making a run on their exchanges at the same time, right? It's a big problem, and it's only going to get worse. And you guys need to understand what's going on. Like, subscribe, and share to Vincenzo's Gold Crypto Investing, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news, because I'm impartial, I'm not shilling, and I just try to keep you the best, logical, most up-to-date thing that's going on, right, in the crypto world. And you need to be very careful and understand the risk and the major risk of keeping your money on exchanges versus a bank. Peace and love, peace and love.